Well, I told everyone to be prepared for volatility earlier today, and that is exactly what we've gotten as the day has progressed. We're seeing a lot of red across the crypto market, and this is obviously coming off of the news this morning surrounding our macro data, which frankly was not that great. And we're going to talk about whether this is more of a long-term concern. Is this something that's going to continue to impact the markets, or is this actually just the latest in a series of retail shakeouts? Because the money is showing something quite different than what we're seeing in the charts right now. So if you guys are new or haven't already, make sure you hit that subscribe button down below. Hit that bell again. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So when we're looking at ADA right now, in terms of the charts, we actually got down to about 66.5 cents a little bit earlier today. Right now we're up at about 67.5 cents. We're kind of chopping around. And I did, in fact, open up some short positions earlier today. I actually closed them near the lows here. So every single one in profit. Can't complain about that. And the reason why I did that is this seems like more of just a short-term retail shakeout than a long-term issue with the crypto market. And we're going to progress on this in just a moment. But we saw BTC drop actually down to about 92.9. It kind of drug everything down with it. And the big reason why we saw this was the GDP report was not just low, it was bad. We actually saw the first declining quarter of GDP in quite some time, a negative 0.3% growth in the US, so declining quarter. First declining quarter we have seen since all the way back in Q1 of 2022. So yes, this was a quarter where everything slowed down here in the US. Me and my industry, I did in fact see a spike in buying, and we'll see if that was more of pulling people ahead of the out of the future months rather than, just slowing down in general. But people were starting to hoard their money. And a lot of what this had to do with was, of course, tariff concerns. Where is the economy headed? What is inflation going to look like, right? That's the thing that has been on everyone's mind for such a long period of time. And it really started, what was that? Back in September, October. That's really when everything began, because we had hot job reports. Inflation was still sticky. So what we saw was, because of this hoarding, that's the reason why, one, GDP dropped. Two, we saw actually inflation drop in terms of the PPI and CPI reports. So it's all starting to make sense now, as everybody's just frankly scared shitless. That's the best way to describe what's going on. Now, I need to remind everyone that following that ugly Q1 of 2022, which this wasn't even as bad of, or as bad as, we saw increasing quarters of GDP, basically from then all the way until now. And really what helped things run at that point was lower rates, money printing. All right. Now, global liquidity has been on the rise. And so what we're likely to see now in terms of the US is this acceleration again, like I talked about earlier today, towards interest rate decreases, acceleration towards quantitative easing, acceleration towards money printing here in the US to help stimulate the economy. Go figure. This is the exact path like we've been talking about. So yes, it sucks in the short term, but overall it's going to take us to a better place. Hopefully that makes sense. And frankly, what we saw around the crypto market was big liquidations. We talked about this compression in terms of the price of ADA. We talked about this compression in terms of BTC. Market makers helped push price down. Retail capitulated and followed. And guess what? Now we've wiped out all these short position or all these long positions in terms of ADA and other assets across the space. What typically comes next? Well, you typically go on a quest towards the top then. I'm not saying that's what's going to happen for sure. But what I do want to point to as well, and something that I think a lot of people have slept on, is how much capital has actually entered the market in this short period of time. From the early part of April until probably about the 23rd, 24th or so, we saw a very flat month in terms of new capital entering the market. It was still positive. We're still seeing that. But what we actually saw was a massive surge from just 1.5 billion to 15 billion in just 10 days. So we have seen inflows in the crypto market accelerate in a big way. And that's because a lot of capital was getting prepared to accumulate. Now, what's interesting about this is people need to remember that when we look at USDT dominance in the crypto market, it hasn't really changed during this time. And actually, most of these over the past, 10 days? Most of these days have actually been green days. So the capital that's hitting the crypto market is actually flowing right to the sidelines. We've seen massive printing take place in terms of USDC and USDT. So there's a lot of capital that's been prepared for dips in the crypto market. That's why I'm saying that right now, frankly, this could be one of those short-term shakeouts where capital's positioned itself to accumulate and buy during these dips while market makers push price down, while retail capitulates, and then we continue setting new higher highs. All right. That is the potential where we're at right now. Could things fall to crap and just keep dropping? Absolutely. You always run that risk, right? Obviously, a declining quarter of GDP puts us closer to the big R word, a recession, because by the true definition, 2 declining quarters of GDP in a row are in fact a recession. The US uses the 3-quarter definition for whatever reason, which is I think the only country in the world that does that. But that is something that now needs to be obviously lingering in our minds. We still need to see inflation dropping. We still need to see, there's concerns about tariffs too. That could obviously slow down GDP. I mean, there are legitimate concerns when it comes to that. But what we're starting to see now is a little bit of that decorrelation, like we've spoke about many times before. Decorrelation from the stock market, decorrelation from some of the macro data. Yes, there is short-term volatility when it comes to it, but the crypto market is effectively starting to plant its foot in the ground and starting to move opposite the negative news. And we'll see if that's the case. We just got to be patient. Again, we need to, if we do keep dropping, we do need to close a higher low than what we saw back here, right? Basically our higher low back here was around 59 cents. Do I think we're getting down there? Not necessarily. We're still on top of structure, so we're looking really good there, but that's what's going on right now. We just need to be patient. We got to sit through the dips, take advantage as they come to us. And of course, today is another day of opportunity across the crypto market. Go figure. We've been getting way too many of those days as of late. So I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. Catch you guys in the next one. Take care.